Good morning, fellow option traders. This is Jeff, and this is the daily scan for December 27th, which is a Thursday of 2012. Only 3 more trading days left because New Year's Eve, or next Monday, is a normal trading day time-wise. I found out, at least from the information I dug up. So there is today, Friday, and Monday left in the year. I had a question come in from a reader of my blog. His name is Chris, and he asked me about the Fiscal Cliff and asked me about a particular trade that he had in mind, and we'll cover that later. So stay tuned for that. For right now, though, we'll take a look at our positions. This is the remains of this insurance policy, which is that calendar, and we still are hanging on to the long puts. They're worth nothing, 3 cents. Well, actually, they're up a little bit from yesterday, I believe. Apple trade, which is a bear call trade, is doing pretty good. Apple moved in our direction. It's still not looking real good for Apple right now. Still in a very solid downtrend. We're no longer in Baidu, so we can take them out of there. Chipotle, we're no longer in that. We can take that out. Panera, no longer in that. We can just clean up our A-plus list here a little bit. Let's take a look at the Profit 10 portfolio. And we were a little bit concerned about rut yesterday. It was looking a little hot. It definitely had a decent pullback yesterday, so we are making money on our 2 rut iron condors. And now the Qs are a little bit of a concern. Take a quick peek at that. And let's take these leftover calendar things out here. We are positive 133 deltas, so that's on the cold side. We are introducing a fairly significant amount of downside risk here with this positive delta. Not in a panic mode yet. You can see that the market today is looking like it might open up a bit. But with all the uncertainty and doubt in Washington, who knows? Let's take a look at the Russell. And we need to set this up for, no, we can't do that. Here, let's go back there again. Let's go back on the Russell. Come on. Sometimes this does this. There we go. I think I have... yeah, I have that in there. Take that out of there. So the Russell now, we have, we're hot 5 deltas. Not too bad. I believe it was about 6 yesterday. We're pretty good. We're up $65 yesterday. We were flat or down a little bit, so we're hanging in there okay on this. Still not exactly sure. This iron condor is probably out of the picture for right now because it did pull back a bit yesterday. So I just take that off of there, and I'm not thinking that anymore for the Russell. We're pretty happy where we're sitting right now. Let's jump into the A-plus list and do a quick scan, which we haven't done for a while, at least since last week anyway. Alright, we need to get to Apple. Apple did not have a very good day yesterday. It's still this low here. Let me zoom in a little bit more here on this weekly chart. This low down here around 500, we're still looking to see if it's going to bust through that. No entries. No way I'm going long. This could be a long entry with an uptrend, but there's no way that I'm going long right now. Let's zoom in just a little bit more. And it looks like on the long-term chart, on the weekly chart, that it's bouncing off of here, but not liking it on the midterm. In the short term, not looking real good here either. Next, Amazon. We're just looking for entries, just little quickie scans here to look for entries. Amazon's too flat right now. Did not have a very good day yesterday at all. Overall, long-term and an uptrend. No entries though. Baidu. We were looking for something up here on the long term to go short. And we don't have confirmation yet. And yeah, this oval over here is the one that we were looking at to go short, but I didn't get any confirmation on the longer term. So we're still waiting for a possible short play here. We're just going to kind of pay attention to what's going on. Baidu is acting kind of strange, inverse to the market. CF. Downtrend, no entry. Uptrend, possible entry. This one bounces around quite a bit, so we will put a circle in there, an oval, to draw our eyeballs over here to keep an eye on this. Got a new color now. Didn't like that yellow, looked kind of gross. Chipotle. Alright, still got an alert on here. Can take that off. Alright, flat on the midterm. Long term and a downtrend. Are we going to get any sort of confirmation here? Let's put a little marker in there to draw our eyes to it. Waiting for that hook down. Salesforce. Uptrend. Pretty powerful. Missed this move, that's for sure. I don't know, I might have been in back here. That's entirely possible. Can't say I missed that move because I don't keep my trades on my charts anymore. It gets them too cluttered. So if we get more of a pullback here, we might be in for a short-term entry, but I still would like to see it hit this 20 and then give me a hookup, and then we can jump in with a long play. Google. Downtrend, no entry. Uptrend, no entry. MasterCard. On the midterm uptrend, might be lining up for an entry here. We'll put a little, put a little marker down here. You know what I did? I put cycle brackets in here. Someday we're going to talk about this. I need to delete this drawing. Alright, now I want ovals. So we're going to want to say, hey, check that out. Price line. Well, yeah, look what we got. We're setting up here. Anytime you see a big long oval like that, it tells you that it was put in over here on this chart. I'm going to, however, delete it. I'm going to put a new one in with the new color. Alright, that's what we're looking for. And that would be a midterm play, probably a regular monthly expiration. And finally, Panera Bread. Long term, there's a possible entry lining up here. Short term, we're in a downtrend. No entry on, midterm, no entry on the midterm. Okay. Alright, so the question for Chris was, if we're going to go over the cliff, What he was thinking about was doing a call on a inverse ETF. Inverse meaning an ETF that goes opposite the market. So if the market moves up, the ETF moves down, and if the market moves down, the ETF moves up. Now, which list did I have that on? I think I had it on in play. All right, so here's one, ProShares short S&P 500. This is an inverse ETF, SH. All right, so it would take a look at a chart, and you can see that yesterday it was a down day on the S&P, and it's an up day on this particular ETF. Now, a word of caution about inverse and double inverse and triple inverse and things like that, ETFs. Make sure that you check out how they fund themselves. A lot of them trade futures, and they go, like in this case, they would short the E-mini futures, and they tend to lag the market in performance. So if the market moves up 10%, they may only move up 8%. So just keep that in mind. Make sure you read up on them before you do this. But if you were to say you want to do a long call on this, and we come in with the situation of, where do we pick this? Do we do like January? Because if you pick January, you're getting a lot of time decay on your premium. You could say, well, maybe I'll just buy something that has a delta of 100, so there really is no time decay. I guess you could do that. So if this is a delta of 1, actually, so for every dollar this ETF moves, your option should move a dollar up or down. Of course, if it moves down, then you start getting closer to, you're deep in the money here, you start getting closer to at the money or out of the money, then your delta starts deteriorating rapidly. But let's just take a look at this. If we were to do this one with the delta, it would cost you $340 to buy this. And you can see that versus, let's pick one that's more at the money. Let's just take a look. 34 is at the money. So you can see that there's some time decay in here that you're playing with. But if you do one that is at the money, is that one 31? Is that the one we picked? Yeah, or with a delta of 1, then you get this dollar for dollar performance. All right, and the question also was, what about volatility? Well, volatility doesn't really matter anymore, and you can look at that here. If you have a delta of 1, volatility is not going to matter. So we're looking at an IV volatility of about 17%. So if we were to increase that another 5%, it makes no difference. It's just like you might as well just buy the ETF at this point. So the volatility is not going to matter. However, let's just reset these parameters. Volatility does matter if you don't have a delta of 1. So let's move back to this 34. And our break even is right here, based on today's price. All right, so let's just zoom in a little bit on it. Now, if we increase our volatility 5%, now because your delta is different, is not 1, now volatility is going to affect your trade. And your option will be worth a little bit more, and it will, if the market moves rapidly down and your inverse ETF moves up in value, then you're starting to make a little bit more money quicker. But, you know, as time, then you got time working against you too, because now let's say this is January 7th and volatility increases 5%. Now it's not so pretty anymore. Now you're only up 12 bucks. Where if you go back to today, you'd be up $25, as it states right here. So what's the right thing to do? I would much rather prefer to just, if you want to just go with a regular ETF like the Qs, or even play with the Russell, or which is a cash index, or the Spiders, which is an ETF on the S&P 500s or Qs or whatever. Why not just buy a put? Because you know, I just don't feel comfortable with inverse or ultra short or ultra long or any of these double or triple ETFs because of I forget what the term is. It's fandango or something like that, with how you lose money when they trade futures as the underlying. So just make sure you check that out. So for a Fiscal Cliff play, I would much prefer to do a bear call spread on it. Yeah, you're limited, but you're limited in your gains, but you're limited in your risk too, and that's the important thing. You can just buy a put also if you want. My bet, if you are so positive that it's going to go down, you should grab something with a delta of 1. So let's see here if we have any puts with it. Nearly, you have to go, yeah, I have all up here, so I'm showing all the available. You can't really get to a delta of 1, but you can get pretty close. So if you maybe want to pick something around 90, that would cost you $600. And we can take a look at this. So we're looking at a dollar for dollar move here. So if it moves down to 60, you're up $436 off of a, this is a $600 investment. So if we move down to 60, you make 400 bucks. And if we move down to 58, you doubled your money. And could we move down to 58? Yeah, we could. We most definitely could. 58 is not out of the question. So if you want to do a play like that, you could do that too. That's another option. Okay, so this video is just way too long, I think. But hopefully it's got some good information in it that you can use. And I thank you for watching. Have a great day and happy trading.